where do we get the opening price on Sunday? That's never us. That is never going to be anybody at all that retail control. We can't control that. But that price is already determined before they happen. By Friday's close, they already know where they're going to open it up, and that probably is unsettling to you. That means it's rigged, and you should be glad that it's rigged. You should not be upset that it's rigged, because if it wasn't rigged, none of us would make money. We would have the same odds that the lottery players have, the same odds that casino people that use the slot machines. Usually, I can't remember what the name of those things are, but the slot machines have really no skill set required to win it, which means there's no edge. There's no way except for cruise through the aisles and wait for somebody who's been sitting there for a long time to get up from that machine, and then you go over there and you put more money in it, and it pays out on ratio. It takes in so much before it pays out. It's rigged, but you don't know how much has been paid in before that will pay out. So what I do is I teach you how to look at how it's rigged. Look for those moments where everything is indicating that there's so many things that it's going to move one-sided at this specific time of the day. Very important. And it's less likely to do the opposite of that. And if you can do those things when it's not high resistance liquidity run conditions, that means there is a high impact or medium impact news driver in that trading session. So that means you're going to have some kind of manipulation, which is what we want, because we want to see them use that smoke screen to get people that don't know what they're doing on the wrong side. And when they see those individuals come dogpiling in, that sentiment shift, because social media being what it is, what is the first thing you want to do when you put a trade on and you start seeing a little bit of profit already? You want to go and show everybody. You want to send me a picture of it. You want to send somebody else on Twitter, somebody else on whatever the other social media mediums that you use. I'm in this trade here. You didn't say you were going to take that trade, but now because it's in slight profit and you have a stop loss protecting it goes against you, now you want to talk about it. And you want to see other people pat you on the back, congratulating you. That is proof of the sentiment ideas I'm teaching. So when the Judas swing takes effect and when the market's primarily rather bearish and you see a little bit of a run higher, retail will chase that and think it's going up. Or they'll put a breakout order in if it goes a little bit higher, then they'll say, okay, I'm going to buy that and stick with it and think it's going to take me into profit. That sentiment shift is what is kind of like that line in the sand between those people that are impulsive versus the people that know what they're looking for. And by understanding that medium impact or high impact news driver being in 8:30 or sometime inside of the first hour trading, that is essential. That's essential for low resistance liquidity run conditions. So having a medium impact or a high impact news driver is synonymous with low resistance liquidity runs. That does not mean, very important fact here, okay? It does not mean simply because you have a medium impact or high impact news driver or event in the calendar that you're going to have a low resistance liquidity run condition. It just means that that's the climate that they exist in. More than any other, there's some kind of manipulation that's going to be used around these reports. And if you don't have those things on your economic calendar, then the likelihood of you having a high resistance liquidity run, it's more likely that it's going to happen because there's no news to manipulate. But when there is news, that means there's going to be manipulation. That means they're going to catch people offside. That means they're going to trick people and put them in the wrong side of the marketplace. And if they get put in the wrong side, think about it. Why would this logically be even occurring? Why would there be low resistance liquidity run conditions when there's high impact or medium impact news? Because they're going to put people on the wrong side of the marketplace at the most inopportune time for them. When they're going against them, they're going to be selling to them when they're buying. They're going to be buying when they're selling to, when the retail's selling it, they're buying it. They're going the other side of it. They're being counterparty. And once they have established the session high or low in the first 30 minutes of trading, are they going to just slowly move away from them and allow them to think about what they're doing and say, oh well, let's think. Do I want to hold in this trade that I'm losing money consistently in? No, they don't want to have any time for them to get out and take their orders out of the marketplace. So that's why medium impact or high impact news drivers are indicative. They're characteristics of low resistance liquidity runs because the whole mechanism of the price engine is it puts people in on the wrong side during or shortly after these impact drivers on the economic calendar. And they are not going to afford them the opportunity to close their trade because that's why the market moves quick. Speed and magnitude, speed and distance. These are the little signatures I type out when I'm doing my recordings because I expect these things to happen because now retail's trapped. And they're not going to let price move slowly down. And you think that everybody's like, okay, we're all going to collectively decide to sell short real fast, real abruptly to cause the market to drop fast. So that way those traders can't get out. No one's doing that. That's not what's going on. The price engine falls out of bed precipitously when it's bearish and it's done its job of putting traders on the wrong side by a Judas swing trading higher, creating the morning session high, which could very well be the high of the day. It drops aggressively, fast. And if you're on the right side of the marketplace, it's fun. But if you're on the wrong side, it's dangerous. It's devastating. It's morally deflating. It's crushing because it's like, wow, what just happened? And you're proving that you don't know how the markets work. If you're asking what just happened or how did that happen, you need to stop trading with real money and learn how to trade.